If you're looking for a ridiculously simple 1-minute scalping strategy, what are you waiting for? Let's check this one out right now. What's going on, everybody? Today I want to share with you a simple 1-minute scalping strategy. In fact, it's so simple, your future self is going to travel back in time and thank you that it's so simple. What are the rules to this simple strategy? Well, we need to confirm the trend on the 1-minute time frame. So we're not looking at any other time frames. We're just trying to decide if it's going up or down on the 1-minute chart. Once we've confirmed that, we're waiting for a pullback. So it could be several candles pulling back, or it can be one larger one pulling back. And then when we've seen that happen, you're waiting for the opposite candle. And the opposite candle needs to be small enough. We don't want to see it make a big move because we're not going to get in on the trade if it's already made its move. So once we've entered in on the trade, the stop loss will be 4 pips. Take profit will be 8 pips. So we're not looking for a lot. This is just a short move. And if the trade happens to go against us, if there's an opportunity to close it, we will, but most times you won't be able to. It'll end up hitting your stop loss before you get that opportunity. So now that we know the rules to this scalping strategy, we're going to take a look at this. Now, we're also focusing from London Open, so 3 a.m. to 11 a.m. into New York as well. So they're going to overlap. There's a lot of activity. This is the best time. This is also during Eastern Standard Time if you're from a different area. But you're also focusing on pairs that have little spread, little to no spread. So if that's not you, you're going to have to change this around a bit to make this work better for you. And when we're looking at this, you can see that at one time, price was going sideways. It wasn't going any further down. Started pushing sideways, bouncing back and forth. But then you can see that price was moving in one direction. It was going up. And if you were to ask your younger self which way this was going, they would likely tell you it was going up, because that's what it looks like. Now, if you can't look at the chart, if you can look, when you're looking at the chart and you can't tell which way it's going, stay away from it. So now that we've established which way the trend is going, you're looking for buys. We're only going to look for buys the rest of the way until we believe the trend has changed. So we know the rules. So we've identified, we've confirmed the trend. It's going up. So we're looking for buys. We're waiting for a pullback. And then once we get a pullback, we're looking for the opposite candle. So price goes up. We have a pullback. Now we have an opposite candle right there. So candles can change quickly. So you want to try to get in on the trade just before it closes. And we get in on this one. Remember, what we're aiming for is a 1 to 2. So we're risking 1% to make 2%. And in this case, this worked out. So we go to the calculator. So we're at 2%. Price pushes up. We get our pullback. Here we go. There's the opposite candle, just like exactly what we're looking for. We enter in on the close of the candle, or just before it, and we're aiming for a 1 to 2. And in this case, this worked out. In fact, it was less than a couple minutes before it hit its target, which was nice. Now we go up to the calculator, add another 2%. That puts us at 4. And you can see how this can easily be done. And the only reason this is working in our favor is because we know that the price is moving in an upward direction. If price changes direction, then then we're going to have to change our bias, and then we're going to have to be looking for sells. But during this example, you can see that price is moving up. We do another pullback here. Now, here's a nice engulfing candle, but the problem with that is it's already done its move. So even though it's an opposite candle after the pullback, we can't get in on that trade. If it was smaller and somewhere around here, we could have considered it, but it's made too much of a move, so you have to stay away from it. And you're going to wait for another pullback, looking for an opposite candle. And sure enough, here's our pullback. There's our opposite candle. We enter in on the trade, aiming for a 1 to 2. So we're trying to double what we're risking. And in this case, we hit our target within less than 3 minutes. Go up to our calculator, add another 2%. That puts us at 6. Then price comes down. We get an opposite candle. We enter in on the trade. And in this one, we actually get stopped out here. So we lose 1%, which takes us down to 5. And price pushes up, price comes down. This was a larger candle, so if it could have been multiple smaller candles, but because this was a larger one, we'll consider this as a pullback. And we get in on close of the candle. And this one here, now with this, it almost hit. So unfortunately, you didn't make this, and you would have to make a decision if you're watching this closely. If you're scalping the way that we're doing it on this example, you'd likely see this, and you would have to decide if you're going to close the trade. But following the rules here, we end up losing this trade, and we're going to -1, so we're down to 4%. But we can also see that price is coming down, and this was a deep pullback candle in the opposite direction. We enter in on the trade. And with this one, we end up hitting it. This one here was basically less than 4 minutes for this trade. We jump up to our calculator, add 2%. Whoops. Sorry, that puts us at 6. Okay, and then price pushes down. Opposite candle. And you can see this one worked out. We add another 2%. That puts us at 8. Price comes up, price pulls back, opposite candle. And with this one here, this one worked out as well. And you can see this was less than 3 minutes for it to reach its target. And then we go back up to the calculator, add 2%. That puts us at 10%. And then price keeps going up. And then at that point, you may have considered getting in. For argument's sakes, let's just say you did get in on this one. And you would have lost this trade. Well, actually, it was pretty close. But yeah, we're going to say you lost that one. Jump up to the calculator, minus 1%. Put you at 9. And that is your trading day. And you can see from the moment that we got in on this one, the first one, to the moment you finish the last one, it was 1 hour and 16 minutes. Not a bad day worth of trading. And the only reason this worked well is because you were able to trade in the direction of the trend. If the trend would have changed, this wouldn't have worked out so well, and you would have had to change your bias and trade in the opposite direction. Now, let me know what you think of this. This is a simple and easy strategy that you can start practicing right away. And if you have any questions about it, leave me a comment. And until next time, bye for now.